Well, good morning, everybody. We've had a pretty much of a down week. It's not any surprise that we're having a correction. It's not major. It's about 4 or 5% so far, and it would not be surprised. I would not be surprised if it got up to 10%. But I don't think so. I think we're getting close to the end of this particular correction, and I think we'll have a deeper one in the summer. Statistics that were out this week on economics, there wasn't a lot, but all of it was more on the upbeat side than the downbeat side. Wholesale sales were up 0.5%, a little bit more than expected. Inventory was up 0.3%, a little bit more than expected. April small business index was up 94.5, was 92.5 last month. Germany's industrial production sharply increased 2.8%, very much diametrically opposed to what's going on in the rest of Europe. But Germany, the largest economy, is doing quite well. Um, their construction spending in Germany was up 30%. 30. That was pretty amazing. Jobless claims were flat. You remember they were down big last week, and that's a weekly report. So that wasn't neither bad nor good, but it is fairly low. So that is a good thing. The trade deficit jumped. And a lot of people look at the trade deficit as not a good sign for us. What that means is we're importing a lot more than we're exporting. But that doesn't mean we're not exporting very much. Exports actually grew too, only 0.5%, but exports grew. But if we import a lot more than we're exporting, it also could mean that our consumers are spending money and are buying foreign stuff. So not necessarily a bad thing, in my opinion. This morning, inflation was benign. It was a little less than expected, in fact. And that is good because it gives the Fed all the freedom it wants to do to keep the economy rolling. It can start at QE3 if it wanted to, because its mandate is to control inflation and get our economy going. Well, sometimes that's conflicting. If you have inflation and the economy is not growing, well, the Fed can't boost the economy because inflation might increase. So, but there is no inflation, and therefore he can do what he wants. And the Fed can do what he wants to move the economy forward. The big problem, of course, everybody knows out this week was Europe. Europe, with their elections last weekend, showing more radical parts of their governments gaining power. Those elements don't like the austerity. The people don't like the austerity. They're in recession. There has to be austerity, but there also has to be a plan to grow the economy, and it's kind of a very difficult problem. Austerity means stop spending, and spending helps boost growth. Well, the problem is Europe has overspent so many decades, decade on decade on decade, for all of those people looking to Europe saying, we like their system, with the free medical and all those things. Those things cost money, and eventually they come back and bite you. Look at us; we're heading down that path. It's eventually going to come back and bite us. And how it bites you is debt in Europe. Cost of debt is rising. And since they're so leveraged, that cost of debt rising is going to collapse governments if they don't get a control over it. So that's the problem there. China is another issue. Its imports and exports growth, remember they're still growing, the import and export growth slowed down, and that's a problem. Frankly, I think that's a problem that could easily be solved, and I think China's going to solve it simply by boosting spending or lowering borrowing costs or um, lowering the barriers to imports or freeing up the dollar. They have a lot of options because they have a lot of money, and they're going to implement those options. So I'm not too worried about China. I think that's a net positive down the road. Not today, but down the road, a net positive. So our stock market is just ratcheting down after a very, very big first 3 months of the year. Very common. I don't think anybody should worry about this too much.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.